Hi, this is Jim Cramer, co-portfolio manager of ActionAlertsPlus.com with a special bulletin talking with Stephanie Link. Now, Stephanie, we did something that I think some people at Jim Cramer on Twitter were thinking, wait a second, what is AAP doing here? Buying back GE above where we sold it. And you and I have been going back and forth about why this is right.
I think it started with the quarter, the third quarter, when the company management delivered.
Yes.
It's been a long time since they beat on the top line, on the bottom line, and margins in particular. So we got more comfortable there. We thought, okay, maybe their guidance for the full year on margins actually is doable. But then they started talking a little bit more about taking out value and selling off some of their non-core businesses, particularly in the financial segment. And I think that is really going to drive 2014 earnings and a re-rating in the stock.
Yeah, and I think one of the things that people have to keep in mind is a discipline that I learned at my old hedge fund, which is it doesn't matter where a stock's been, it matters where it's going. Because if the facts change, you can't say, you know what, my discipline says you can't touch GE. The facts have changed here. I really like anything that diminishes financial, and I really like anything that's oil and gas, and that's been the profile. Jeff Immels had been given a tough hand. He took his time. He really, some people say he didn't do it with alacrity. But now you're going to get the dividend boost. Now you're going to get the buyback. This stock is still well below where it was. Most can't say that. That's why I think GE, you didn't really miss much.
That's right.
And if we're just going to sit here and say, oh, darn it, I shouldn't have sold it, that's not the right reaction. The right reaction is, you know what? It's good enough to get back in.
Yeah, and you have an analyst meeting next week.
And it's going to be very good. Thank you so much, Stephanie.
Thanks.